Alrighty traders, George here, and I just wanted to give you a little recap on some balance beam performance through the second quarter as we're already getting into July here. So I want to get this off my desk, but I just want to show you guys a couple of things and a few things that I'm looking at just to give you a better insight to what you've experienced here as part of the Balance Beam subscriber group. Let me just show you what I've got here on my screen. For starters, this is the equity curve that we've been building from January through June. We're at 24,513, and this is for trading a single contract per the markets that are called for the subscriber series. It's been a really nice equity clip here. There's no complaints about this at all. Every year and every quarter's got its own little nuances, but this is what we've had over the last 6 months. You know, I'm not huge on metrics, obviously. See it, trade it, and move on is my big thing. But there are a couple things that I look at every once in a while when I have enough data. And I've got a few things here that I'll show you if I can get this thing to move downstairs. So just some insight to what's driven all these gains here. 161 trades for 2017 so far. All right, so for quarter one, we had 71 trades. For the last quarter, we had 90 trades. The gain per trade came down a little bit over the last 3 months, but still not too shabby. We basically booked about 12K per 3 months. One of the really nice things is we had 23 winning weeks out of 25, and the 2 weeks that were booked in the red were not booked in the red by much at all. One of the great hallmarks of this methodology. Trade breakdown here over the last 6 months: 22 for the NASDAQ, 71 for oil, 60 for gold. Those are the three main markets we follow. S&P and Euro kind of on the side if it sets up when these guys are not setting up. They actually booked a little red ink there. A really interesting metric here is the intra-week market drawdown for a particular market. What the greatest was $750 for gold, but that week recovered in the green, $450, due to the performance of oil. For 2017 year to date, 11 of our 25 weeks have had gains or loss less than or greater than $750, so within the boundaries of $750, either making that much or losing that much, which means that about just over half of the time is when we're really making a lot of the gains, and in this other time we're either making some small gains or we're being very defensive with any losses. So that has given us 161 trades with an average of 7.5 trades per week. For 2016, as a comparison, throughout the entire year, we had 19 of 49 weeks that had gains or losses in that 750 or boundary. We were actually trading at about 6.1 trades per week in 2016. So we're a little bit actually heavier on the trades for 2017, but that's actually coming from the re-entries as opposed to the primary trades. So just a little bit of insight for you there. And then, you know, I'm not a big fan of the question why when it comes to trading, because it always takes traders into the wrong direction. But I do have a few things that I will look at when it comes to the question why. One of them is, you know, why does this seem to have such an edge? So I have this slide here, a rare look at why. One of the things that we're doing is we're doing small stops and big targets. Okay, most traders will expand their stops and they'll have smaller targets due to fear. So they don't really get the big moves, and when they're booking losses, they're more than they need. Through the balance beam, we're able to see where all the trading commitment is. Not just volume, but actually trading commotion. The churn of all the traders making whatever choices they're making. This gives us great precision for our entries and for targets. It also gives us this repeatable evidence that builds our belief, that drives us to be able to trade it, because no matter what you do, if you can't execute it, well, what's the point? So you've got to absolutely own the follow through subconsciously with no resistance whatsoever. That happens really easily with this, obviously. So the other thing is fewer trades. This is about 6 to 8 trades per week, as we've been doing for the last 2 years in this series, and most traders are higher and with greater stop losses. So that combined makes it very difficult to pull out of a small account balance and make it. It's possible, but not that likely. The other thing that drives this performance is that we have limited markets that we trade, and they're essentially non-correlated markets. So as you just saw, oil, gold, and the NASDAQ are the big three. That's key to what's happening here. The other is that we have re-entries where we have our trade calls initially go out. We will look at doing a re-entry if it's in the trade strategy as it goes out to you guys. We will look to do a re-entry, but there are restrictions there, so we're not into a machine gun mode where we're doing a lot of trades. There's also time restrictions in terms of when we would do our trading. That also puts the limits on frequency. So all that comes together to make this thing what it is. And that's why it's pretty much the end all. You don't really need anything else. You don't need to look at any fundamentals. You don't need any other indicators. You don't need to trade other markets. You don't need to do what you think you need to do. All you need to do is just learn a couple of key techniques here and off you go. Whether you're taking the signals as a subscriber or you've got the charts and you're building yourself as your own balance beam trader, like most of you guys are, well, obviously you've got, you know, your own work to build on top of what you've seen here. So the hooks are in, as they say. Just as a reminder, gang, no trading this Thursday. We will be in training tomorrow. We'll go over the trade calls that just went out a couple minutes ago, and we'll see you then.